But let's hear out from the biggest deal maker here on ET Now.
Wasn't a question of, and I think we were always talking about a percentage which was higher than 49. There was always a discussion with Traffic Gura for a long time to also take a share. We felt that the value was attractive. We felt that our philosophy has always been that we invest in a business, we build it over time. We think we are able to build a world-class or a world-scale business, and then we look at an opportunity to monetize. And if you look at most of what the group has been doing over the many years, our shareholding generally has been very high. So I think that the call was between retaining a minority shareholding vis-a-vis an attractive valuation, and so we took the call of going with a higher monetization.
Prashant, the problems that the group has been facing of late are of course no secret. There is a mammoth debt that you've been having to deal with. I'm sure there's a lot of pressure from the lenders. There are other legal troubles that keep you busy. What I want to understand is, how did you not manage to sell at a distressed price? I'm sure there was a lot of pressure from the lenders. Instead, you're walking away and calling it the largest FDI inflow into the country.
Well, firstly, I want to correct some of this debt and perception issues. I think most of that is related to the steel business. If you really look at the performance of the rest of the group, other than the steel business, which is the oil and gas business, the port business, even the power business, our international investments like our refinery in the UK, they've been doing fairly well. Unfortunately, it's just that the steel business has been getting much more of the media limelight, if I may say so. And yes, it's true that the steel business has gone through a difficult patch over the last 2-3 years. Some of it was our making, some of it was what's happening in the global commodity space. So I think most of the debt or most of the banks issues are largely related to the steel side.
It's 44,000 crore rupees of debt.
Yeah, I mean it's a 70,000 crore investment and a 20,000 crore equity investment, which people don't normally realize, that if you make a large investment in the country, in any country, there is going to be a portion of debt and there is going to be a portion of equity.
Yeah.
And normally that's in the ratio, in India that's in the ratio of 2:1, so there's about a 35% equity investment in all these investments. And it's supported by an asset which generally should have very strong earning potential. But give you an example, even if you take Essar Oil, 5-7 years ago, Essar Oil went through a difficult patch. The project was stalled.
The Supreme Court.
We had a court saying that we could not, continue construction, etc. And we did go through a difficult period. And the same questions were asked then of Essar Oil. And if you look at what has happened over the last 7-8 years in Essar Oil, it's been a very steady performance. Once the assets go into production, once they start generating to their potential, you generally come up with, hopefully, come up with a good result, as we have seen in Essar Oil.
And so you're getting an enterprise valuation of approximately $13 billion. Can you tell me what you're going to use most of this proceeds for? I would imagine is to cut debt. You said you'll cut debt of the group by 50%.
So firstly, just a quick, just small clarification. The way it's done is actually two transactions. There is a 10.9 billion for Essar Oil, and it's about 2 billion for the port assets which Essar Oil will be acquiring. So those are the two numbers. But you're right. If you look at it together, it's 12.9. As regards the
this is of course the big deal, but the pre-open rates are out as well, so focus on the markets. This has an impact. I think a lot of people would want to believe that related Ruia Group companies could also benefit. Some money could go there. Non-committal, the Ruia family of course on that.